Sorry.
Oh, there I am. Okay, now I see it. Perfect.
Awesome. So let me try this again. Okay. So are you able to see my screen now?
Yeah, I see you and
Okay.
me.
Awesome, awesome. So let me see. I'm trying to admit. Okay, there's Ashley. Hi, Ashley.
Hi.
Okay, let's see if your background works.
Now I don't have like an option for video.
Let me see if I can do it. And I'm gonna promote you to panelist and hopefully that gives you access.
Okay.
Okay. Let me change this. Okay, I think you're gonna have to give me back the access. I gave you the panelist control.
Mm-hmm.
So I'm gonna have to take that back.
Okay.
Only because let me see if that works. Because now I'm not able to share. Sorry, let me sign out and sign back in. You guys can stay in there.
Okay, no problem.
Good afternoon, everyone. My name is Beth Maranzini, and I am the Madam Chair of Prospanica National Entre Amigas a Mujeres Brillantes Award, and I'm thrilled to have you with us for today's webinar, The Power of Investing in Women's CEO. Extremely excited about this topic. This is a game changer for all of us. We have never before addressed this topic, and I'm just really excited to elevate all of us to that level of conversations around investing women CEO. Today, we'll be exploring the groundbreaking Hypatia CEO ETF. What is that? Well, that is the first fund dedicated exclusively to investing in publicly traded US companies led by no other than female CEO, which is the core, right? We, in our mission, support women. And so this is extremely exciting for me. This pioneer approach offers investors a powerful way to align their financial goals with their values by championing leadership, diversity, and gender equity. I am so honored today, extremely honored, to be joined by Erica, no other than Erica Kramer. And who is Erica? Erica is the chair of Prospanica and general partner and co-founder of a gender lens venture firm investing in tech-enabled startups, and Patricia Lizarraga, Chief Investment Officer and Managing Partner of Hypatia Women CEO Index and ETF. They will guide us through this dynamic and data-driven, which I love, okay, data-driven discussion on why women-led companies are not just making a difference. Listen to this. This is important because I just learned this. They're consistently outperforming even in the face of systemic challenges. And that's why we're here. We are here to sort of put the lens into this incredible news that I learned myself on women CEOs outperforming in today's environment, which we know is so challenging. What is it for you? What is it for you listening to this webinar? Well, you will gain insight into how Hypatia ETF isolates and elevates women-led firms across industries using an equal weighted strategy that challenges traditional market assumptions. Through today's section, I am hoping that you're going to take a lot of notes, but also we'll look at the compelling research behind the fund, discuss the impact of inclusive leadership on business performance, and explore how you can be part of a growing movement that sees investing as a tool for both profit and progress. We are so excited to connect, learn, and inspire action with you today. Our goal, this is our goal now, is for you to leave this section with a deeper understanding on how investing in women CEO isn't just a smart investing. It is value-driven investing with the potential to reshape, listen to me, reshape our economy for the better. So with that, I would like to welcome Erica Kramer. Erica, can you please tell us a little bit more about yourself? I did share you are the Prospanica National Chair. Just give us a little more detail of who you are and why we are so enamored about everything that you do.
Thank you so much, my friend Beth. I really appreciate all that you do for our community, what you represent for Latina leaders here in corporate America and in the United States. As Beth mentioned, I'm our national chair for Prospanica, and my background is predominantly in finance. So I spent most of my career as an investment banker, specializing in M&A advisory with financial services firms, including asset management firms, wealth advisors, multifamily offices, and fintech platforms. My career evolved to doing some corporate board work and then in investing. And for me, it was very important to be investing in companies that were exclusively founded by women. So I am a co-founder of a firm and a fund that invests in exclusively female-founded companies. And as you'll hear from Patricia, my other friend here on our panel, investing in women makes tremendous sense for financial reasons, investment reasons, social reasons, so many reasons. And I am just hugely excited to be in this space. Yeah, I think I will just pass it off to Patricia and let her introduce herself and her extensive background and what she's doing with Hypatia Women CEO Fund.
Thank you, Erica. So thank you. My name is Patricia Lizarraga. I am actually Peruvian, and that's something that Erica Craver and I share in common, I think, our Peruvian roots. We actually, the first time we met in person, we'd spoken over Zoom many times, but the first time we met was here in Lima. So we really share that connection, and it's really special as women, as women in finance and as Latinas. So my background is similar to Erica's in the sense that I started my career as an investment banker, also an M&A banker, and but not focused on financial sector clients, just focused on corporates. And when I started my career after business school in 1993, there were actually 0 women CEOs. And today we're at 11%. So it's a lot of progress, a little bit, and not that much. But basically, over the course of the next hour, we'll share with you how that, being an investment banker, I think brought both Eric and I to this place where we really wanted to invest in women. So I am the Chief Investment Officer of Hypatia Capital. And Hypatia Capital's main focus right now is something we call the Hypatia Women CEO Index and ETF. And what it does is it measures the performance of American public companies that have a female CEO. And it also allows you to easily invest in all of the companies through a fund, an exchange traded fund that trades on the stock exchange, and you can actually invest with as little as $29. So I'm the chief investment officer of that. We're going to get more into it, but I think I'll hand it back to you, Erica, to lead the conversation.
Yeah, I mean, I think it's helpful to reflect on why it's so important. So I graduated my undergrad in 1990. I think I was the only, if not a few, of women that graduated with a finance degree. Most of my career, I was surrounded by men, and I felt like I was really the only. And I had some great mentors, both men and women, but I felt like we needed more. We needed a larger community. And it wasn't really until I started joining some organizations like 100 Women in Finance and others where I was like, oh, wow, I get to partner with and invest along and explore and learn about values-based investing. I care about the environment. I care about education. I care about access to financial tools and investing in venture capital, which is where most of my activity is focused. The numbers were dramatically similar to what Patricia is stating, that less than 2% of venture capital dollars are allocated to female founders, which is just needed to change. We need to see more venture capitalists that are women, and we need to invest in female founders. And the system just wasn't set up for that kind of success. So the venture capital landscape was different, and it was very much a movement, and it's been a very successful investment strategy and focus for us. Patricia, maybe you could describe why this was so important for you personally, professionally, to focus on women CEO, publicly traded CEO, in the way that you're doing it.
Sure. So again, going back to the career, started my career when there were 0 women CEOs. By the year 2000, which is, 25 years ago, there were 3. And I was humming along in my investment banking, being like everybody else in my age group, one of the few women that was making it up to the managing director level. People were dropping off like flies. And it wasn't until 2004 that I had a female client. So if you think about it, investment bankers in the M&A space, their clients are CEOs and board members, and there weren't any women CEOs. So by definition, I never had a female client. Until about 2004, I had a female client, and her name was Gilbert Beau. And she was, I think, in her late 70s, early 80s, and she was still buying companies and merging them, et cetera. And it was my aha moment where I said, I want more clients like her. I want more female clients. I don't want to have all men clients. I want to have some female clients. But I realized at that moment that if I stayed at this big international bank I was working at, that was impossible. So I did a little bit of research, and I found out there were actually quite a few senior women, division presidents or women of that were leading smaller companies. And I said, okay, I'm going to quit my job. I know I'll have at least a couple of clients come with me, and I'm going to get started. So I did that. And it was a successful strategy to me because I did have a few clients that came with me. My biggest client came with me, and in investment banking, you just need one client to come with you, and it's actually good business. So I did that. And it was, and I'm just going to age myself. Why not? Because it's part of the story. I was in my late 30s. And all of a sudden, I started seeing a lot of my girlfriends getting passed over for promotions, right? Where they were really good, but they were promoting younger guys. And it goes with this research that says that women get promoted on performance and men get promoted on possibilities. And that's really when I started having this very focused investment thesis. And the investment thesis of Hypatia is that women CEOs will outperform. And the question people ask us always is, why will they outperform? And it's because it's harder for them to get to the top, right? The research tells us that, and I think personal experience tells us that. So the ones that actually make it to the top are really quite extraordinary by CEO standards, better than average because the average is male. So about 20 years ago, I started developing this thesis. And at the same time, as Erica was telling us, a movement to start investing in women that were starting companies was getting started. And I also joined these investment firms. So I'm an investor in Golden Seeds, I'm an investor in Portfolio, How Women Invest. And I was really happy doing that, investing in women CEOs. The research tells us they're going to outperform. But I started thinking, this isn't right, because early stage investing, legally, you have to be an accredited investor. You have to either be making $300,000 or you have to be worth $1 million. And I just didn't think that was fair, that only wealthy women could invest in women when women outperformed. But everybody has to be an investor, right? Or you should be an investor. If you are here today, you probably already have a 401k or a Roth IRA or an RIA. You're in the market, and you're 100% almost in men CEOs. And I just thought that wasn't unfair. So what I thought to myself was, okay, women CEOs outperform. The research is telling that me. My early stage portfolio is telling me that. How can we create a product that lets everybody, every woman in the United States of America, invest in women CEOs? And that's how the idea for the Hypatia Women CEO came about, was really because A, we believe women CEOs outperform, and B, we want every woman in the United States and actually the world to be able to participate in that vision.
I love that. My former partner from when I first graduated from college, and then we were partners in a small investment banking boutique. Her name is Liz Nesvold. She and I formed our own investment banking boutique in 2008. And I think at the time we were the only women-owned investment banking boutique. And we created our own wealth through that exercise, right? Like we exercised through our career, through building a firm, and then ultimately having an exit. And part of that success was now having capital to be able to invest and continue to invest forward in women. And what we have found, at least in the private markets, is that women they focus on things like healthcare and equitable healthcare, or solutions that focus on access to lots of tools. In fact, I think some of the data demonstrates that women are actually more capital efficient, and because we don't necessarily have the same access to capital. We know that already, that women receive less venture capital, and your publicly traded CEO ETF. I don't know if there's any evidence that their access to capital is any different, but we do know that their ecosystems might be different. Their networks are different, but they're more diverse. We also know, at least on the private side, on the private market side, that their boards are more diverse, and their employees and their leadership is more diverse, so more inclusive workforces. Is that what you're finding on the public side? What can you attribute to some of the characteristics of a female CEO, and why they might be more successful at managing a public company than maybe some of their male counterparts?
Sure. So we find very similar points to the one that you're making about capital efficiency and about teams. And let's go into, first of all, who are the women CEOs of public companies in the United States? So first of all, there are 165 companies in the United States that have a woman CEO trade on the public market and have a market capitalization, so that means what their equity is worth, how much they're worth, of over $500 million. So we invest in all of these 165 companies that are big, right? They're worth at least $500 million. And some of the companies you might know, so let me give you some names. One is Citi, right? One is General Motors. Oracle may run your ERP at your company. Abercrombie and Fitch, you might have bought some of their clothes. Williams Sonoma, that includes Pottery Barn and Pottery Barn Kids. Best Buy has a female CEO. Foot Locker has a female CEO. Dick's Sporting Goods has a female CEO, but Dick's Sporting Goods actually just bought Foot Locker. So
oh no, we need it. We need a we need a new company to fill up.
Exactly. We have companies you may not have heard of, such as Parker Hannifin, which is a huge $80 billion company. We have Northrop Grumman. We have Occidental Petroleum, and so we have 12 biotechnology public companies worth over $500 million in the United States, many of them focused on women's healthcare. So there's 165 of these companies in every single one of the 11 industries in the United States, multiple ones in each one. So if you invest in women CEOs, you're getting a broadly diversified,
Not just beauty firms, right? Like, it's not just beauty and fashion. This is high tech.
I mean, you do get Clorox. You do get Olaplex, but you also get Occidental Petroleum and Sherwin-Williams. So it's super diversified. And as we all know in investing, rule number one is diversification. Don't put all your eggs in one basket. So what do we know about these women as a group? Because they're in all industries, and they range from companies that are worth $500 million to our biggest company right now, which is Oracle, which is worth $600 billion. So there's a huge, huge range in size. And what we do know is that women CEOs have senior leadership teams that are 80% more female than men.
Wow.
Right? Women CEOs have senior leadership teams that are 36% female. That still means that even women have senior leadership teams that are 2/3 men. But men's senior leadership teams are only 20% women. And what does that mean? That in that 20%, of the male senior leadership team, it is usually the head of HR and the general counsel. Most men, on average, do not have a single woman leading an operating division, whereas most women have at least one person on their senior leadership team who's leading an operating division. And as we know, operating divisions are what you need to do to get promoted to the CEO. But it's even more important than that, because those women, those additional 2 or 3 people that the woman CEO has in her senior leadership team also have more balanced leadership teams themselves. So by adding a woman CEO to the mix, it cascades throughout the whole organization. And that means that you or your daughter or your granddaughter or your BFF or your BFF's niece have a bigger chance of getting promoted. This is why we need more women CEOs in the United States if we're going to get to equal opportunity. And this is, I clearly feel extremely passionate about this. I think it is so important for everybody to want to leave the world a better place than they found it. And the way we do it is by having more women CEOs. Now,
And closing that wealth gap, right? Like, so I give my own story, or mine and Liz's story, for that specific reason. Are there any studies on equitable pay? And at least our experience is that when you have a woman leading an organization, there's less likely to be pay gaps between a man and woman in the organization.
sure. So that you very much have an excellent point, Erica, because while companies in the US don't necessarily have to disclose the pay gap that their company have, in the UK they do, the US we don't yet. But what we do know is that women run more sustainable companies. And how do we know this? People ask us all the time, is the WCEO ETF an ESG stock? Are you about environmental, social, and governance? And our answer is actually no, we do not have an ESG filter. The only filter we have is woman CEO that runs a company that's worth at least $500 million, right? So technically, no ESG. However, this is the exciting point. It turns out that the Hypatia Women CEO ETF has 5 sustainability globes from Morningstar's Sustainalytics. Okay, so what is Morningstar's Sustainalytics? The most well-respected ESG arbiter in the market is a company called Sustainalytics, and it was bought by a company called Morningstar. And what they do is they rate every company in the world that's publicly traded on ESG, and they give it 1 to 5 globes. So 5 is the highest. And to get those 5 globes, it's the top 10 highest ranked ESG companies. They do that for every company. But they also do it for funds, right? Because the funds are made up of, in our case, 165 companies. Some funds are, if you're the S&P 500 fund, you have 500 companies. If you're a highly concentrated fund, you might have 40 companies. But Sustainalytics will take those companies that are in your fund, in our case, the 165 companies run by women, and provide you with the score of how many sustainability globes you have. And the WCO has 5 of them. Now, our comparable fund, what we compare ourselves to, that's all the men, only has 3. Women are, they just only have 3. BlackRock has an ETF that's called ESGU. So it's the largest ESG ETF in the world. It only has 4 sustainability globes.
Wow.
So I don't know for a fact that women pay more or have the pay gap is smaller, but I think it's one of the concepts that Morningstar has access to and that as a whole, we can say that women run more sustainable companies. So that's really important because we want a more sustainable world.
I think it's a key differentiator. And when I think about diversification in my portfolio, in my liquid portfolio, why would I want such a small percentage of my portfolio to be run by women? It's predominantly the public company exposure, whether it's fixed income or equity, is going to be run by men. And I don't view that as diversified by any means. And what you're stating here is that women tend to run more ESG sustainable companies that inherently should perform better just because they're not going to have the same issues, employment issues, environmental issues, these grand episodes that can cause a public company to underperform or even fail. So that is super interesting. Let's talk a little bit about access and asset allocation. Institutional investors will have a broad asset allocation of how they think about their funds being invested across a spectrum, right? From extremely liquid, fully liquid investments to privately held, illiquid investments. And there's a risk return profile within each category. When we launched our venture fund, we, in essence, democratized venture capital investing by limiting the size of the fund as per the SEC and the Jobs Act. But to your point, it only allows for accredited investors, any investor that meets those standards. But additionally, it may not be appropriate on a risk return profile for most investors. Venture capital, private equity, these are long periods where you may not get access to your capital, you may not get your investment back at all, and it may take a very long time for you to get your investment dollars back. However, the return can be quite interesting and exciting, and you can have some outsized returns for taking that risk. And the fund that I run with my partner now, we've already seen 3 successful exits, meaning 3 companies have sold to a strategic partner and have had a successful exit. And we've been able to already, in 5 years, return some of that capital in what is a 10-year fund. And there are many funds like ours in the universe. There are a lot more female portfolio managers focused on venture capital and private equity. The challenge is many advisors, wealth advisors, aren't always aware, especially if they're a male wealth advisor. They may not have the research department that's really thinking about diversification or values-based investing when they are selecting advisors and funds for one's portfolio. In fact, I have found that there are many successful women that have created their own wealth, but often leave the investing to their spouse, to a family member, to a wealth advisor that may be male and just does not have the same perspective on values and diversification. And when it comes to private investing, it really does demand a great deal of research, due diligence on the fund, the portfolio manager, their history, success in investing, what their experience has been, and any past track record. I would love it because I think the ETF is such an easy way to get exposure. And like I said, like you and I have both been talking about, diversification is so important. Why would I want a non-diversified exposure to the equity markets where 90-something% of my liquid exposure is with male CEO run publicly traded companies versus female? So maybe you could share how one gets access to your fund and others, like you have mentioned on the private side. There's Golden Seeds, there's Portfolio, there's even in our community a number of venture organizations that are Latino and Latina focused. Somos VC, Angelus Investors. So there's numerous ways of going about it, but I think yours is probably the easiest. So I'd love it if you could share.
Sure. So it is in talking about asset allocation, right? And I know maybe this is simplistic, but just so that we can situate ourselves of where we think of our investing pie, right? So we have an investing pie, which if you're young, and now I'm thinking young is like 60 is still young. The majority of that pie, because at 60, you're going through 2 more cycles at least. So let's say the majority of that pie is in equities, right? As opposed to debt, right? So you still want your money to grow and grow a lot. And you usually are going to have on the public equity side, let's say it's 60% of your portfolio, you are going to divide it among different, what people call asset classes or different pockets, right? You want big companies, medium companies, small companies, international companies, and maybe some emerging market companies, right? So you think those 5 buckets. The Hypatia Women CEO ETF fits in what's called the small cap allocation. Now, that doesn't mean it's full of small companies. As I said, our biggest company is $600 billion. But because of our methodology, which Beth had alluded to, which is we equally weight them, it is a small cap lookalike. So if you ever get asked, where does this fit in your portfolio? You can say small cap lookalike. But you, depending on the size of your portfolio, you may be managing your portfolio yourself. And if you are, I'm going to tell you how to buy this. It is super easy. Whether you are on Fidelity or Schwab or Robinhood, whichever platform you use, SoFi, it's easy. You go to buy and you put in the ticker symbol. And the ticker symbol is WCEO, as in women CEOs. Put in the ticker symbol, and 1 share today is about $29, right? So whether you are investing 1 share or 1 million shares, it's available to everybody. I know this isn't an investing class, and I don't know the makeup of the everybody on the call, but I do want to say that before you invest, study what a limit order is and make sure you put in a limit order. All that means is if you buy, you're going to buy it at the market price, not at some ridiculously higher price. So remember limit order, remember the ticker symbol, WCO ETF, and remember that depending on the size of your portfolio, it can be a very large part of your portfolio, and you'll still be quite diversified. And this isn't a sales pitch. I hope nobody's taking it that way. This is just about telling you how you can make your portfolio look more like the world that you wish existed, right?
Exactly. And taking control of your investing future, right? And not just leaving it in someone else's hands, including your 401k, taking real control over how you think about asset allocation and exposure and diversification within your retirement funds. With our fund, we did accept for accredited investors investments through their IRA with specific IRA providers that allow private fund investments, private equity, real estate, and venture funds. But it's so easy if once you open up a brokerage account with Schwab or Fidelity or any of the platforms that you mentioned, to be able to type in this ticker symbol and invest as little as $29 for one share of the ETF. You know what I was thinking, Patricia, even describing what is the difference between an ETF and a mutual fund might be helpful for our listening community. I don't know if you're willing to share your knowledge of that.
Sure. Sure. So when you think about investing in funds, the ETF, and an ETF is called exchange traded fund. So that means that the fund actually trades on a stock exchange. And this is really important in differentiating it from a mutual fund. Why? Because with an ETF, again, you can go into Schwab and buy the stock. If you change your mind 2 days later, or even the next day, you'd say, you know what, I don't want that stock, I'm selling it. Or if you bought 500 shares and you want 100 of those shares to go to something else, you can execute that trade whenever you want. Now, with no minimum, right? The minimum is 1 share, in this case 29, and I think there's fractional shares. With mutual funds, you usually cannot buy them yourself. You have to go through an advisor or a broker, and they will probably be charging you a commission. It's called a load. On the ETFs, you don't pay any commission. As far as I know, there's no such thing as an ETF commission on Schwab. So you're paying a commission. There's usually a minimum of at least $1,000 for mutual funds. And you can't get your money back the next day. It's not T+1. You have to contact your advisor. You have to tell them you want to sell the shares. They then put in the trade, and usually they execute the next day. And I actually, well, it might be T+1. T+1 means trade date plus 1 more day. And I don't know if they've made that, but it used to be that mutual funds traded, you'd get your money in 2 or 3 days, and you're charged a commission either when you invest or sometimes when you sell, they take a load. And therefore, these are products that make financial advisors more money than ETFs do. And so that's one of, the biggest challenge. Are we getting into challenges yet or not yet?
Let's do it.
Let's do it. So before I get into the challenge, there's one thing that we haven't said unequivocally. Our investment thesis is that women CEOs will outperform. Okay. We have an index that goes all the way back to 2018 and shows massive outperformance. But if you had bought the ETF the day it launched on January 9th, 2003, it outperforms its benchmark, the S&P 600, which is men, through inception. So we can unequivocally say, as of right now, the proof is in the investment. If you invested in women, invested in men, the first day was feasibly possible. Today, the women would have given you a better return. Okay, that's great. Why isn't everybody doing it? We ask ourselves, why isn't everybody doing this? Or at least all the women, but actually all the women and the men should be doing it too. I mean, presumably the men want to make more money too. It's not just women that make more money. Even though women fund managers, by the way, do make more money. So what's going on here? The fact of the matter is that the financial wealth management community is not friendly to new ETFs. And therefore, we are having our biggest challenge is scaling this ETF to sustainability, right? So as I was saying, the advisor community does not have an incentive to deliver ETFs versus mutual funds, right? If you have a broker dealer who does charge commissions, they will make a lot more money selling mutual funds, selling annuities, selling these structured products than they will by selling a liquid ETF like ours, right? And so it's so in order for this product to become something big and something that people actually believe that women outperform, it's up to individuals at this point to invest.
Right. To
That-
take control of your own financial position, your financial future, thinking about your savings and how you can make your savings grow through an investment in an ETF like yours.
So the important thing is that it's real. People ask us, why is it important for this ETF to grow? And the reason it's important for this ETF to grow is, I said it before, we need more women CEOs. If we want equal opportunity, we need more women CEOs. And then we get the question, but how does my $29,000 or my, whatever you decide to invest, how does that help? And it helps because as this ETF gets exposure, it provides the data to the board members and the search executives that are putting together the slates for the nominating committees for the next CEO to be chosen. So for example, I'm in Lima, Peru right now for a board meeting, right? One of the main things that we do, that any board of director does, one of their main roles is CEO succession. That's the one decision the board actually makes. All the rest is board, it's management presents a strategy, you approve it. But the board selects the CEO. And that's given to the board in a slate, 5, 6 people. And so if there's no women on the slate, or if there's one woman on the slate, the Harvard Business Review says if there's only one woman on the slate, it is statistically 0% that she will get promoted, right? So you need at least 2 women on the slate, but they're seen as risky because we all see, put CEO in ChatGPT, show me a picture of a CEO, you'll get a picture of a white guy. You say, show me a picture of a CEO with a ponytail, it'll show you the same white guy with a ponytail, right?
Mm.
So we need to educate the market that women CEOs are not riskier, they're in fact safer. They're in fact safer in the good times, and they're actually safer in the bad times, right? So it turns out that this is another thing that we can say about women CEOs. It turns out in the period since we've been measuring the performance of women CEOs, which is 2018, it turns out that every time there's a crisis, and there's been 2, there's been COVID, and then there's been the tariff turbulence.
Mhm.
In both of those, the women have massively outperformed.
Oh, so interesting.
It really is. And so Fortune called us and said, what's going on? Why? And so we went back and did our research and looked for third-party research. And apparently, surprising nobody, women have balance sheets that are better prepared for turbulence. They have less debt and they have more cash.
And stronger risk management,
And
likely.
stronger risk management. So the market in a turbulent period is going to recognize that. So we saw that as a fantastic performance. And as I was saying, the important thing is for the market to really start accepting and believing the fact that women outperform. We know as women, I'm assuming that, most of the people on this call, if not all, Entre Amigas, are women. And we know intuitively that women perform. Apples to apples, women perform, but we need the market to believe it so more of us get promoted.
Out of your, how many female CEOs? 106?
About 165.
165. Are any Latinas?
Yes, we do have Latinas, and one of that I'm thinking about is actually somebody who I hope will soon be in our portfolio, is a CEO of Fannie Mae. Priscilla Madovar is this first person that comes to mind, but actually there's really not that many Latinas that are leading large publicly traded companies,
We
unfortunately.
need to change that. And I think venture capital plays an important role in it. It is part of the reason that I got involved in venture, because if you think about the starts of companies, it starts as a privately held company. These are magnificent ideas that start with an individual, and then they get backed, friends and family money, and then venture capital, and then institutional investing, and it goes through this whole progression of capitalization of a company until they can go public. And it is why we need to continue to invest in women from the early stage startup all the way through the publicly traded company, for all of those reasons that you state. And Latinas, with our growing population of Hispanics in America, we're the largest consumer group in America, and why we're not investing in leaders that we recognize and see ourselves in is a huge question. So
And it's a question, Erica, that Hypatia, that we at Hypatia feel really passionate about, right? I know that I, as a Latina young lady, was not taught to think about wealth creation or about investing from an early stage, when in fact, your biggest superpower, man or woman, is time. It's the compounding factor. And we believe that women are taught to invest later than men are. And we think that this is one of the reasons that women retire with so much less money than men. Women retire with half the money that men retire in the United States. When it goes Latina, it goes even lower. So we created something called the Hypatia Investathon. And you can find it and sign up, or have your daughter sign up, or have your cousin sign up, or gift it to it's free. It's called the Hypatia Investathon, HYPATIA Investathon.com. And what it is it's a free financial literacy program to get women started investing, right? It takes about an hour and a half to look at all the videos and do the assessments. And it is meant to bring young ladies watching an hour of videos interested in opening their first Roth IRA account and investing $100 in women CEOs. Now, obviously, we would have to, just practically have every college student in the United States doing it for it to be a business. I mean, this is a labor of love. We want these young women to start their investing career early and start it with a 50-50 portfolio, because that's the world we all want to see. No, I don't want to see a world that's 100% men's, women CEOs either. Like, I like balance.
diversity
Right?
matters.
So that's what we're trying to do, is create this free financial literacy program to get young women started on their journey to future financial freedom. So to the extent that anybody has any questions on that, if there's a chat, we can put in HypatiaInvestathon.com. You can send anybody to sign up. It's 100% free, and hopefully inspires young women to invest in women.
What a gift. This is why I so love our community. Beth, everything that you are doing with Latinas and our monthly webinars, and what Prospanica does for inclusive workforces and for students, for MBA students nationally. I think, this is the power, right? Like, we have to do this together. We have to share information. We have to support one another. And I'm so happy, Patricia, and grateful that you could come and speak with us and describe why it makes tremendous financial sense. So thank you for that. Beth, I pass it back to you, unless, Patricia, you have any final remarks to make. What a gift for our community. Thank you.
Well, I just want to say thank you to you, Erica, for suggesting this, for Beth, for joining us, and for the whole Prospanica team. And it's so important. We're such a vibrant part of the growth of the continued growth of the American economy, which is the motor of the world. And I think that we need to, have more organizations like Prospanica so that we can continue to make sure that we move this ball forward for
Our
the generations
children and
coming
every,
after us. Exactly.
yeah, absolutely.
So thank you for the opportunity to share what we're doing. It means a
Yeah.
lot to me.
And gracias, Lorena, and the rest of our Prospanica national team as well for helping to put this on. Beth, please.
Well, thank you so much, ladies. I will say this. The Latina track, the mission of the Latina track has always been to help and develop Latinas professionals to achieve career advancement, recognitions in the workplace, and pay equity. But the other aspect is that one of the part of the mission is to, we aim to bring awareness to corporations, educational institutions, and nonprofit organizations on the positive financial impact of hiring and promoting professional Latinas. But now that I heard you, ladies, I am going to make an edit to this mission. I will say not only to bring awareness on the positive financial impact of hiring and promoting, but also investing in Latina CEOs corporations. So to my committee that is listening, to my national team, that is a change. We need to make sure that we invest in women-led corporations. So I want to thank you. I learned so much, to be honest with you, tonight. I got great insight. I myself, started to invest out there, something that, I think I'm learning early stages. So anybody can do it. You don't need a lot of money to start investing. So this is a good segue to say, even if you have $100, I don't know, 1 year I took my bonus and invested, whatever it is, do it. Yes, do it. I will encourage people to invest, especially, now we learn, and I didn't know about this product, the exchange trade fund before I heard here, always mutual funds. Nobody really ever talked to me about this ETF. So I'm definitely going to look for the symbol WCEO, and you bet I'm going to start investing on it, whatever I can, as soon as tomorrow. I promise that. With that, I want to just ask one quick question. We're running out of time, but I do want, there's a nice question on the chat that states as follows. It says, as a 50 plus woman, I have struggled over the past year to find an advisor that is willing or able to do a custom portfolio focused on value-based investing. I am tired of high fee, low value from advisors that simply want to put men into generic portfolio and have me investing in things that I absolutely so not want to be funding. Hello, Tesla and Palastri. She put in the question. I would much rather invest in the ETFs like DEMZ and Hypatia that focuses on performance and values. Are there fee-only fiduciary advisors out there that will do value-based investing, or do I just need to craft and manage my portfolio myself?
The answer is it depends, and Patricia, you can certainly jump in. It depends on how much wealth you're managing. For certain, we need more wealth managers that are women, and I am always encouraging my daughter and her friends and her generation to get into finance, to get into wealth management. One source I could suggest is just looking on the CFA Society, so the Chartered Financial Analyst. There's rigorous education that one needs to go through in order to get what is called a CFA licensure, and they have a women's and women and wealth management segment. I'm also a member of 100 Women in Finance, and that's a .org. We don't advertise anyone in particular, but there's a lot of education, and we do mentorship, and so we have those sorts of events. But Patricia, maybe you have a quick go-to as well, as far as resources. There's financial analysts associations out there. And then there are some wealth managers that are more focused on values-based and ESG and impact investing. So just like you would do due diligence on a stock or a bond or a portfolio company, you should do the same on your broker check. You can go to the SEC website and FINRA website to do a broker check to see if anyone has a track record of performing, of doing something badly or having notable disclosures. But I don't know, Patricia, if you have any that you can recommend, perhaps those that include your ETF as part of their asset allocation when they advise wealthy clients.
So there's an organization called Invest for Better, and it's run by a woman named Janine Firpo, and it has free classes. It's free to be a member, free classes on how to invest your values. But it also, as members, you get a free ability to go, I think the website is valueinvestors.com, and it has a list of about 200 advisors that you can search through and see, if you like what they're talking about. So if you care about women, there's ones that say they're women focused. If you really care most about the environment, they'll talk about that. And if they won't let you invest in WCO ETF, please let me know. Find me an email and let me know, and I'll call them and say, hey, why do you have a values advisor that won't invest in WCO? That doesn't make any sense. But Invest for Better has resources and free access to values advisor, I believe.
Perfect.
I think there's one more question, but we're just gonna have to get back to the person who asked because we're running out of time. Once again, Patricia and Erica, thank you so much for educating us today. I feel like I'm walking out of here with a better sense of where I would like to invest to make sure that we're diversified. I'm walking out of here with data, 165 women CEO, that's it. And not many Latinas, maybe a couple. Well, we need to change that for sure. So a lot of good insight to amplify the impact of gender diversity while we're aiming to expand and invest and expand our portfolio. So thank you so very much. This was everything I dreamed it was going to be, this conversation. So I am encouraged, but I also feel like everyone who was here is encouraged to invest. And again, you don't need to have the big funds. You can invest on starting with like $29, for this EFT or whatever fund. Just be encouraged, okay? So let me just share thank you, our national Prospanica National Office partners, Lorena, Erica, and the entire team, our wonderful CEO, and I don't say wonderful because I want to say he is a true good friend of mine, Tomas Savino. Thank you for, your support. And last but not least, everybody take your pens out. I really want you to walk out of here without what's next for us. What is next? We continuously look for things to deliver to you that deliver value to your development, to your, equal pay, career, promotions, so advancement. So what is it? Coming up, we do have our next upcoming webinar on July 16. So please register now. You'll see the Q code on the screen. Also, I will encourage you to join Prospanica. I am a life member, Prospanica life member since 2011, and my entire career and the level that I'm at, I will with confidence say, I owe it to Prospanica. Yes, I did it, with my knowledge, my skills. But Prospanica opened that door for me of the opportunity for that job that catapulted me. So please, 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 become a member and, just grow as a professional and connect with other professionals and join all the different activities. We have, I don't know, about 37 or more chapters, including Puerto Rico, that you can be part of and participate in all the event. I also want to invite you to something that is really dear to me. It's the first year that we're going to have that. So please join us. We are going to get together in person, familias, mujeres, hombres, everybody. Just join us July 25th for our Para Ella Symposio. And that's going to be in Malibu, California. I literally just purchased my ticket. So I am going. So I will say hi to you in person. Erica, yay. So join us there. And I have women from all over the world coming, friends that have female owned nonprofits around the world that are coming and are going to join us for you to meet them as well. And last but not least, the next day is our famous Mujeres Brillantes Award, where it all started. That's how I started with the Mujeres Brillantes Award. So normally we host it in November. We are now combining the Para Ella Symposium with Mujeres Brillantes, and we're going to go from Malibu to Los Angeles. So please, 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 the next day, join us. So anyhow, I am going to wrap it up to say how grateful I am to have Erica, Patricia, and to host this type of webinar for you, to help you. Thanks for joining us and investing in youth, and also hopefully invest in the market. All right. Bye.
Right.